Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday the 9th of April 2020. And on Tuesday we published a video entitled Market Update, Equities and Gold and Silver Rise. And on Monday, why the Comex won't default or go under, which followed on from our Sunday's video entitled No Comex Gold, Really? And we provided links to all of these in the description box below. Now, at the time of producing this update, which incidentally is just prior to midday GMT +1, the Euro Stoxx 50 index is down 7 points at 2,843. The FTSE 100 index is up 37 points at 5,715. The DAX is up 40 points at 10,373, and the CAC 40 is down 17 points at 4,425. Now, overnight, the Asia-Pacific markets were broadly unchanged, save the Hang Seng index, which was up 1.4%. Now, as far as the US markets were concerned yesterday, the Dow Jones Industrial Average closed up 779 points at 23,433. That's another rise of 3.4%. The S&P 500 also closed up 3.4%, up 90 points, at 2,749. And the Nasdaq Composite Index closed up 203 points, at 8,090, which is up 2.6%. So we're witnessing some very positive gains as far as equity markets are concerned, and they certainly appear to be slowly recovering. Though do not take this for granted as yet. Now, gold is standing at $1,662, some $13 higher in the last 24 hours and $48 higher since Monday's opening. Silver stands at $15.17, some 10 cents higher over the last 24 hours and 75 cents higher than Monday's opening. In sterling terms, gold stands at £1,337. That's £3 up in the past 24 hours, and silver is £12.20, down just a penny over the same period. In euros, gold is currently €1,529, and silver is €13.95. Now, the gold to silver ratio is 109 to 1, and seems to be oscillating broadly between around 108 to 1 and 112 to 1. The dollar index is still marginally and holding above 100 and is currently 100.05. Now, later today we shall see the weekly jobless figures, and these are expected to be grim, plus consumer sentiment figures and the producer price index for March. Now, these will come out after this video has been published. Now, on Tuesday, the FOMC published its minutes of its meeting on the 15th of March, and in fairness, Bloomberg has produced a substantial summary of it. However, in condensed format, the key messages for us to take away can be found in the following quote. The Federal Reserve is prepared to use its full range of tools to support the flow of credit to households and businesses, and thereby promote its maximum employment and price stability goals. To support the smooth functioning of markets for Treasury securities and agency mortgage-backed securities that are central to the flow of credit to households and businesses, over coming months, the committee will increase its holdings of Treasury securities by at least $500 billion. And its holdings of agency mortgage-backed securities by at least $200 billion. The committee will also reinvest all principal payments from the Federal Reserve's holding of agency debt and agency mortgage-backed securities in agency mortgage-backed securities. In addition, the Open Market Desk has recently expanded its overnight and term repurchase agreement operations. The committee will continue to closely monitor market conditions and is prepared to adjust its plans as appropriate. In other words, it will do and buy whatever is necessary in order to help alleviate the pain markets are suffering from. Now, members may remember that last year we published a range of videos on MMT, Modern Monetary Theory, and at the time many were wondering why we were doing this. Well, in all but name, we're now beginning to see this policy being introduced. Governments around the world are now adopting spending measures and borrowing measures with the aim of either preventing or for reducing the depth of a global recession. Basically, one of the key tenets of MMT. Now, there will eventually be a price to pay, but for now it appears the only logical way out, as far as they're concerned, to ensure social unrest does not become the inevitable outcome of such a crisis if it were to be left unaided. Now, we have said in quite a few recent videos that 2020, or perhaps more accurately the decade of the 2020s, will be the decade for gold and silver, but with silver following and lagging a little behind, at least initially. We're still of this opinion, but we also see this developing gradually rather than in one mighty jump. It is likely that silver's bottom was in when it skirted just below $12, and it may for a while oscillate between $13 and around $17 for a while yet. And only when companies start revving up its production, bringing it back online and running it, will we then see silver's price gradually rise again as industrial demand for it increases. Or alternatively, or even in addition, if there is a major financial failure causing gold to rise significantly and silver follows it as a monetary metal, outweighing any downward pressure that may exist from reduction in industrial demand. And of course, the utopia as far as silver prices are concerned is if industrial demand starts to increase as the world economy gets out of the current mess, and at the same time people gravitate towards gold and silver for monetary purposes. Now, there will be long-term consequences of what is currently happening, and frankly, whilst we believe there may be a slight pullback in equities again, we're not anywhere near as gloomy as some commentators have been as far as the equity market is concerned. However, what the current situation has taught us, and we alluded to a few months ago, and that is that the investing community in particular is now beginning to regard gold as an essential part of one's portfolio, or at least an exposure to gold in whatever format that may be. And this understanding, which frankly has been lost for almost a decade, will now moving forward start to underpin the gold price. Yes, there could be a temporary move downwards in the price of gold, especially if the dollar strengthens considerably, vis-a-vis the video we produced a few days ago, highlighting that there is the potential, in our view, a 70% chance that the dollar could rise, or the dollar index could rise to 105 and possibly aim for 110. And that would undoubtedly have downward pressure, certainly on the dollar value of gold, although a different scenario as far as gold prices are concerned in other currencies, which of course then will have fallen against the dollar. But gold will then, taking a 5 to 10 year view in mind, will be quite a spectacular hold and potential buy. Not forgetting, of course, that wherever gold goes, silver does eventually follow. So we are bullish gold and silver for this decade. Short term, silver's looking questionable, but as the economies begin to pick up and the industrial demand for silver starts to increase, then we will find that the last month or so, if one were able to acquire it, the physical, and failing that, the paper access to silver, that may have been one of the best buying opportunities available. Now, talking of silver, our Illuminati silver 1 ounce round has arrived in the UK. So, eligible UK members of our inner sanctum who've been with us for 12 months or more will start receiving these from the beginning of next week. So do watch out for these and let us know what you think. Thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you are notified of our videos as and when they are published. Not forgetting that we also update our Richard and Greg channel more or less every other day, and so if you haven't done so, please subscribe to that one too. We trust and hope you are remaining well and safe, and that together, over time, all of our situations and prosperity will improve. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.